Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Monday, June 10th, about 6 a.m. Central Time. All right, the precious metals are mixed after Friday's bludgeoning. You have July silver up 34 cents, while August gold is down $10. If you saw the Metals Minute on Friday, I discussed the possibility of a 1-2 punch after China announced the conclusion of its gold reserve purchases, and at the same time, the non-farm payroll data reduced the chances of a July interest rate cut down from 16% all the way down to 8%, so it appears to be completely off the table. While those two developments have significantly impacted the gold market, I found the steep decline in industrial metals quite surprising. While some people believe that silver is the poor man's gold, I believe that every asset class is unique in its own way. So additionally, central banks, they don't hold silver. Silver is way too big, bulky, and heavy. For instance, 5,000 ounces of silver is over 360 pounds, making it physically inefficient to store. That's why futures contracts and warrants, I believe, are the most efficient way to speculate in that particular metal. Now, this week's going to bring new insights on inflation as well as the economy. Today, we have no data coming out, while Tuesday, we have the 10-year bond auction, also Chinese CPI and PPI. Wednesday, we'll have US CPI and the FOMC meeting. Markets broadly expect central bankers to hold rates steady. The inflation print and Fed Chairman Jerome Powell, his press conference will offer more clarity on how much more the central bank needs to cut and then when they're going to cut later on this year. Now, Thursday, we'll see PPI and also initial claims. And Friday, we'll see that University of Michigan sentiment and also inflation expectations. So looking at the trends in metals, copper, gold, platinum, and palladium have all triggered a bearish trend on my trend discovery system, and only silver remains in bullish trend at the moment. Now, what's interesting here is that the spec and the net fund longs in the gold remain at the highest level since 2022, and silver spec and fund net longs are at the highest level since December 2020. The significance is that we could either see a mass liquidation if we continue to see a reacceleration of inflation data, further strengthening the dollar index and also two-year treasury yields, or this may be significantly, we might see significant bottoming action here in the metal. So the shorts on the gold market are really going to have to defend the 2,400 level, where if we get any breach or any kind of movement back up to that level, we might see the bulls really get reignited, and that should propel prices back to new all-time highs. Now, on the silver market, we're going to want to see the bulls really defend 29.13 down to about the 50-day moving average, 28.89. I think that's your key level of pocket support there. So the other markets appear to be really mixed here today. So we're going to want to keep an eye on things. Today is going to be kind of the calm before the storm. So if you want to come up with any kind of risk management type of strategies, I think really today's the day to do it, because you got the weekend behind us, so you're going to pay less for those option premiums if you're looking at buying protective puts, and then you'll also have these key levels of support while the market tends to be a little bit here quieter today. So if you got any questions, give me a call. Love to talk to you. 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.